Testing, testing.
Yes, very good.
Very good, huh?
Yes, now waiting for Mr. Lee.
Okay, Mr. Lee is here.
Okay, hi, Mr. Lee.
Hi, good
Hi,
morning.
morning. Can you test try your slide and see before I go live?
Sure.
Thank you.
Thank you for waiting, Mr. Lee.
Yeah, sorry for delay. Yes, can see. All right. So I'll go live right now.
Okay, thank you.
All right, thank you.
Hi, Gary. Morning.
Okay, we are live now. You can start anytime, Jason.
Okay. Selamat pagi, good morning. 早上好, my name is Jason Tan. I'm the host for today's webinar. Firstly, we take this opportunity to thank you all audience to join our Wheels Week, which starting from 1st September until 9th September 2022. And in this morning, we are excited to invite Mr. Lee Ki-chuan to share with us the untold misconceptions of life insurance and EPF nomination in estate planning. So before that, please allow me to share some profile of Mr. Lee. He is a chartered financial consultant, chartered life underwriter, fellow in Life Management Institute, certified financial planner professional, licensed financial planner, and he is also a principal of Estate Planning Malaysia Academy, which is the first in Malaysia offering 100% online estate planning practice course, and he published more than 200 estate and financial planning articles in newspaper and magazine. So audience, if you have any questions, you can leave it in the Zoom Q&A chat box, or in Facebook, you can put in the comment. We will address to your query after the sharing. So without further ado, we welcome Mr. Lee. So Mr. Lee, the floor is yours. Thank you.
Okay, thank you, Jason, the MC, Gary, and all the others from NYEP and all our live audience today. Let me just share my slides. I'm sure you can see it now. All right, so without further ado, we will start. My topic today is the untold misconceptions of EPF and life insurance nomination. I believe on the second day, we have EPF personnel or staff to talk on the EPF nomination. I believe this is the first session that we touch on the life insurance nomination because of my background in life insurance and also estate planning. Okay, thank you just now, Jason, for my brief introduction. So these are my credentials. I've been in practice since 2003 on estate planning, and for life insurance since 1995. Okay, so I'm a licensed financial planner and also set up this Estate Planning Malaysia Academy, which I'll give you some offer for my course later on practice in financial planning. Okay, so back to our topic. Before we start, just a disclaimer to say that the material is for general information. If you need any advice, you need to seek the advice of relevant professional. Okay. Okay, let's look at EPF money. Today I'll talk about nomination of two things. One is the EPF money and the other one is the life insurance nomination. And usually I start with a Kisah Benar, which is my style, whether I'm in lecturing or I do presentation. Okay, this one was a news article in 2005. The widow was not entitled to the payout. Okay, so what happened is that this young gentleman, the deceased, when he put in a nomination after he started work, he put a parent. Okay, subsequently he got married and then have children, set up family. Unfortunately, he died in an accident, and EPF board paid the EPF proceed to or EPF money of this deceased EPF member to the parent. And the widow was not happy, so he challenged it in court, but she did not succeed. Okay, and also from the EPF seminar or briefing on the 2nd of September, we know that actually for non-Muslim, as long as you put a nominee there, the nominee is a beneficiary, meaning he or she can benefit the money. All right. And there's another case. Let's look at the life insurance money. This was is a 2003 news report. Okay, it's in Mandarin, but I explain it in English. So widow complained that the father-in-law actually held the insurance money, didn't want to give to her. Okay, this has a bit of complication because the marriage was not registered. Okay, so now if you are married, then make sure that your marriage is registered. Otherwise, the widow will not be recognized as a spouse of the deceased. All right. Okay, let's touch on a bit of EPF nomination. Of course, the details are with the EPF seminar the other day and also on their website. So today I'll touch a little bit on the EPF nomination. Then I'll talk a bit more on the life insurance nomination. And then later on, I will tell you 4 implications that I identified and how it actually related to the will writing part, okay? Because we're talking about estate planning. Okay, after that, then I can answer some of your questions. So do bear with me, I got a bit of details on the nomination side. Okay, this one I extracted it from EPF website. You can go and take a look. So there are some myths and facts, which I won't go into detail. You can refer to them later on when you go into their website. Okay, so there is some, they have actually 2 parts. One is for Muslim and the other part is for non-Muslim. Okay, I won't go into detail since on 2nd of September, they have all the details there. If you missed that seminar, of course, you can just go back to the Facebook Live or you can refer the details to EPF website. Okay, so you can save some time on explaining more on the implication of it from the estate planning point of view and also answer some of your questions. Okay. Okay, on the untold misconception on the life insurance side, I'll explain to you a situation about when there's no nomination, and then the situation of nomination. And like I mentioned, I will identify and share with you 4 implications that I see as issues when you plan your wills and how does it work, how they link up with your insurance and EPF nomination. Okay. Right, so very simple. EPF is there's no nomination. Usually you have to ask, they will ask for grant of probate or distribution order, subject to details that they can pay out below 20,000. Then they can have certain discretion to pay to person who is likely to get GP or LA or DO or person who is beneficially entitled under the deceased member's estate. Okay, this one I extract from the website and the EPF Act. Yeah. Right, so these are details, so I'll skip this one. Okay, more important on the life insurance side, when there is no nomination in your life policy, and that includes your personal accident policy. Okay, so what happened is that the sum assured will be paid to the executor or administrator of the estate, meaning the next of kin or your your next of kin or family members have to apply for LA or probate, then only they can claim the money. All right. However, of course, the insurance nomination law now is under the Financial Services Act 2013. We're talking about non-Muslim in this case. So, of course, the insurer is given the liberty to pay out. If there is no executor or administrator at the time of the sum assured, insurer may pay the monies to the deceased spouse, child, or parent in accordance with the Distribution Act. Subject to a maximum of 100,000. Okay, of course, this is at the discretion of the individual life insurance company, right? And above 100,000 or such amount described by or prescribed by Bank Negara Malaysia, then it pays to the holder of the LA or GP. Means you have to go through the probate. Okay, for EPF nomination, to the nominee as beneficiaries for non-Muslim, I mentioned. If for our Muslim friends, if you put in a nominee, they will act as the executor for the estate. Okay, means the money still belong to the estate and subject to faraid distribution. For life insurance, if you have nomination, then you pay to the named nominee. Okay, but it's a bit complicated. For life insurance nomination, they have two parts. So-called one part is the so-called the trust nomination. I'll give you the detail. And then the other part is so-called non-trust nomination. This is actually provided for in the paragraph 5 and 6 of the Financial Services Act 2013. Okay, this one is for non-Muslim. Okay, let me just quote you the nomination section in the Financial Services Act 2013 under Schedule 10, paragraph 5, bracket 1. A nomination by a policy owner other than a Muslim policy owner means this section does not apply to Muslim, shall create a trust in favor of the nominee of the policy money payable upon the death of the policy owner if, okay, there are conditions for this so-called trust section. If the nominee is his spouse, means a married person, nominate spouse, or child, either category. Even the person have a spouse, children, I just put one child's name, or other all the children's name, or anyone. As long as either spouse or child, then it will be caught under this section. Or B, if where there is no spouse or child living at the time of nomination, meaning the person either is single, or when he at the time of nomination he has no more spouse, means he's divorced, or the spouse has died already, and then also there's no child at the point of time of nomination, then this person put the parent, either one or two the parents, as a nominee of this policy. Then what the nomination law says, then a payment under the paragraph 1 above shall not form part of the estate of the deceased policyholder. All right, meaning that it will not go to the estate, the policyholder, then of course not subject to probate process, and not subject to the claims from the estate creditors. Okay, the insurance company will pay to the named nominee, and that named nominee, if a spouse, child, and just now if no spouse or children, then parent, then the money belongs to the nominee, means the nominee can benefit money. In a way, the nominee is the beneficiary of the policy money. Okay, so this is what the trust law says. And because this is what we call statutory trust, means trust that creates by these acts of parliament, like exactly in this case, then the policyholder actually can appoint a trustee of the policy money. Okay, you look at this bracket 3. The policy owner may, by the policy or notice in writing to the insurer, usually fill out a form, appointment of the trustee form. And that trustee form is different from a nominee form. Some insurance company, both sections are in the same form. Some, I see other insurance company, they are separate form. So if you do your nomination in your life insurance policy, if you want, you have the right to appoint the trustee. Okay, sometimes you have to ask the agent or the bank officer or the financial planner that arrange a policy or insurance with you. If you want it, then you can ask for the trustee nomination form. Okay, so if you appoint a trustee, then you can appoint somebody that you trust. And in 2013 Financial Services Act, now they have a new condition compared to the earlier act, the Insurance Act 1996, where it says that now, if you want to appoint a trustee, you cannot appoint yourself as the trustee of the policy. Okay. In this case, is you buy your own policy. You are the insured, and you are the policy owner of this policy. Okay. And you nominate your spouse or child, or if you are so-called single, you appoint your parent. Then you have the right to appoint the trustee, a trustee for this policy. Okay. So the new law says that after 2013, you cannot appoint yourself as a trustee. So who can you appoint then? Okay, so you can appoint a natural person, means anyone that you trust, of course. And then if you are not around, means you die, then the insurance company will pay to this named trustee. So appointment of this trustee is very important. Okay, so again, you can appoint an individual, a natural person, somebody that you trust, and then or you can appoint a trust company now of your choice, or if you want, you can also appoint Amanah Raya, the public trustee, if you want. Okay, so when it comes to appointment of a trustee, do think through it, who is the appropriate person, because the trustee will hold on trust your policy money for the benefit of your spouse, child, or if you are single, your parent. Okay, but later on we'll look at the implication. So now I just tell you what is the law. But I observed that a lot of time, okay, the word is a lot of time, policies in the market, policies sold in the market do not have appointed trustee, only the nominee. Okay, and let's look at what the law says first, then we will discuss the implication later on. Okay, and again, the policy here is if you nominate, if you are non-Muslim, you nominate your spouse or child, you are married, and if you are not, you are single, so-called, you appoint your parent. These two categories only. And the law also says that in sub-bracket 3, where there is no trustee appointed, means the trustee column is blank. Okay, then the law also has a way to say who can so-called inherit the money. All right, so in the event there is no appointed trustee, or the trustee that you have appointed has died before you, predeceases you, then A, the nominee who is competent to contract, and usually here we interpret as above 18. For example, if you appoint your spouse as a nominee, we call adult nominee. Of course, if the competency includes people who have sound mind and have legal status, legal capacity to contract. That's what it means. All right. So if you appoint adult nominee, then the adult nominee shall be the trustee of the policy money. Okay, meaning that if you are not around, you die, then the adult nominee that you appoint become the trustee of the policy. That's what it means. Okay, this is under the bracket A. Okay, let's look at B, where the nominee is incompetent to contract. Again, when you say incompetent, normally we mean nominee below age of 18, means your minor child or children. And of course, that includes people who have no capacity to contract, like you have OKU child, orang kurang upaya, so-called special needs child, and he or she doesn't have the mental capacity to contract, things like this. Then the law says that the parent means the other parent actually. Let's say like you are like for me, like example, easier to visualize. I buy a policy, I insure my life on it. I am the policy owner of this policy. Then I do what we call a nomination. Okay, I put my spouse, or I put my spouse and child, or I put my child only. Then what happened? Okay, so if I put a child which is below 18 years old, then what happened is that this part of the law says that the portion that I give it to my minor child, it will be paid to the parent. The other parent means my wife, as the trustee of the policy for my minor child until he or she is age 18. Okay, so this is what the law says. And if another situation, if me and my wife, we die together, a normal around already, then my policy money, I put my child's name. The nomination will still be valid. Don't make the mistake that the policy will be null and void. It will be valid because the minor child, that the nominee, is still alive. Okay, but the child is below 18 and cannot inherit directly. Then what happened? So what the law says is that the insurance company will pay to the public trustee. Means in this case, we mean Amanah Raya Berhad, or a trust company nominated by you, me as a policyholder, if I do it beforehand. Okay, shall be the trustee of the policy money, and the receipt of a trustee shall be a discharge to the insurer in all liabilities in respect of the policy money paid to the trustee. So the insurance company will so-called wash their hand, normal liability once they pay to the named trustee, or if there is no appointed trustee, they follow this particular section. They pay either to the parent, the other parent, an incompetent nominee, or if both parents died at the same time, pay to the public trustee. Then that's it. Then the onus or the burden is on the trustee who holds the money, okay, for the benefit of the minor child, right? So this is what this section means. Okay, that is above the situation is actually what we call the trust policy, all right? And there's another section, well, I will label it, and usually in the industry, we label it non-trust kind of nomination. Okay, and this part, some people actually are not aware of the implication. But let's look at what the law says first. So under this Schedule 10, paragraph 6, bracket 1, it says that a nominee other than, a nominee other than a nominee under subparagraph 5(1), which is the one that we have discussed above, this just now, shall receive the policy money payable on the death of the policy owner as an executor and not solely as a beneficiary. And of course, any payment to the nominee shall form part of the estate of the deceased policy owner and be subject to his debts. Okay, let me explain. So other than a person who nominate a spouse or child, means a married person. If the person is single, he nominate his parent. Other than these 2 or 3 categories. So all other categories, example, I appoint my brother, I appoint my sister, I appoint a friend, I appoint whoever, all right? All these other categories are under this particular section, paragraph 6. And in this section, the law says that the nominee, the name nominee that I put in, let's say, for example, I nominate my sister, for example, then I die, this policy money, the insurance company will pay to my name nominee, who is my sister. But in the eye of the insurance nomination law, my sister received this money, she cannot benefit this money wholly. In actual fact, what the law says very clearly, actually this insurance proceeds still form part of my estate. Okay, when we say that the asset or the money still belong to or form part of the estate, means that it's subject to estate creditors. Okay, if I owe people money, then my personal representative, either the administrator or executor, will have to go and pay off the debts. And the net or the balance of it only then will pay to, if I don't have a will, then I pay then who can entitle to it? Then if in Peninsular Malaysia and in Sarawak, then is under Distribution Act. If in Sabah, then it's under Intestate Ordinance 1960. Okay, if there is a will, then we'll have to look at, if I have a will, then we have to look at the will. What do I say about this insurance proceed? Even though I already named my sister as the nominee, what happened is that insurance company will pay the money to my sister. Okay, then my sister is supposed to give back the money to the executor or administrator of my estate to form part estate and clear accordingly. Okay, so there is a complication later on if there is no mention of the EPF money, the life insurance proceed for this policy, then what happened? And also there's this technical issue. If there is no residue clause, then you have some complication. I mean, this is a bit technical, all right? So just to summarize it up is, so life insurance nomination, we have 2 parts. One, again, if you nominate your spouse or child, and if you're single, you appoint your parents nominee, then they can inherit the money. But if the child is below 18, then they'll pay to the parent of that child. Or if both parents not around, then they will pay to public trustee, and then the money will be there, no issue. But legally, the children can only get it from the public trustee upon age 18 or upon application by a guardian of the child. Okay, and then the so-called the non-trust part, whoever that you name as a nominee, then will receive the money as an executor, and the money is supposed to, legally is form part of the estate and subject to estate creditors claim. Okay. Right. So this what I'm explaining is what the nomination law is talking about. So I hope it is clear. And okay, now we are done with the no-nomination situation. We're done with the nomination situation. And for EPF, and I'll put a bit more attention on the life insurance. And then now look at some of the implication. Okay, I got 4 that I can share with you. So let's look at implication number 1 and look at the situation of EPF situation. So implication number 1, nominee, what if nominee dies earlier than the member for EPF? Okay, if the nominee predeceases the nominee, EPF member, means nominee die first, then the portion, okay, the portion that you give to that particular nominee, this is for EPF, will be invalid, and that portion will fall back to the member's estate. It will not be shared, with the other surviving nominee if there is more than one. Okay, give an example. For example, let's say I give my policy, my EPF money, or even I'm married, say I want to give it to my parent, my father and mother. Okay, but my father died first, predeceases me, left my mother as a nominee, and I did not go and update the nomination, and I died. Then 50% that I give to my mother will inherit. But 50% that I give to my father, since my father died before me, that portion will come back to my estate. So if it come back to my estate, then isn't it logical that when you do your will writing, you must say something about your EPF money? Even though a lot of people have this impression that I got EPF nomination already, no need to put in the will. So I think that this part, we have to be careful on how we draft the will. Actually, on the 8th, I think is 8, right? I have another session on this writing a practical will. So I'll bring in some of this issue and how to do the planning in this way. What usually I call the integrated approach to will writing and estate planning. Okay, so this one is on the EPF nomination. If the nominee die earlier than the EPF member. All right, so next one, this one, implication when the nominee dies earlier than the policy holder. So now we are talking about insurance, life insurance situation and personal accident policy. All right, so let's look at it. So if the nominee predeceases the policy owner, who is also the insured, then his or her portion will be shared equally by all the surviving nominee. Okay, so now I give you an example. Say, let's say like, okay, I'm use back the same example, but I'm a single. Okay, it means no spouse, no child. Then I nominate, I put 2 names there. I put my father, I put my mother as the nominee for my life insurance policy, for example. Okay, and same example just now, my father has died earlier than me. I did not update the nomination. And what happened is, after I die, then this policy money, what happened is that my father no more, only left my mother. Then my mother will be able to collect 100% of my insurance proceed. Okay, so note that this is different from the EPF rule. So this is, I hope you can pay attention to it and take note of that. All right, so this is for life insurance and PA policy. So that is for implication number 1. Okay, now let's look at the implication number 2, where the nominee is a minor child. Minor child is below 18. It's below 18, can't even go to a bank to open a bank account and receive any EPF or insurance proceed. Okay, so again, I tell you two scenarios. One is the EPF, and let's look at what happened to the EPF situation. So if the nominee of the EPF member is a minor, then EPF will hold the EPF money until the child is age 18. Okay, this is first layer. Okay, however, EPF board is given certain discretion by the law to pay out in this kind of situation where the nominee is a child which is below 18. Okay, let's look at what the EPF law says very quickly. So in case a nominee who is under the age of 18 years, the board shall not make any payment to that nominee until he attains age 18, means a majority age. He is an adult. Okay, but there is a but. But may, all right, let me read it. If it's shown to the satisfaction of the board that is expedient, that is sum nominated or any part thereof should be paid and applied for the maintenance or otherwise for the benefit of that nominee, means the minor child, pay such sum or part of it to a person who satisfied the EPF board that he or she will apply it for such purpose subject to the execution. Such purpose means for the maintenance of the minor child. So just now I make the statement that the guardian or your next of kin or caregiver can go and apply. Okay, subject to the execution of such undertaking by the person, that such sum will be applied solely for the maintenance and benefit for that nominee. Okay, it's fair because the named nominee actually is a so-called beneficiary of the EPF money. All right, so it is a situation below the 18 years old of a nominee. Okay, so I also read up on this EPF nomination, and there is two other situations that I'd like to share with you just to enlighten you. And it says that what happened if when the EPF member dies, and then the nominee that he puts in is medically unfit to manage himself or herself. All right, so medically unfit to manage his or her own affairs. In this kind of situation, similarly, the board is given some discretion, to see whether how to pay out. And they can put it very simple. They can pay out a person who is taking care of that particular medically unfit nominee. Okay, so the law has certain discretion for the EPF board to pay out in this kind of situation. And this is another situation. Okay, this one again, EPF member, he put a nominee, but when this EPF member dies, this nominee for whatever reason is of unsound mind, means go cuckoo or what, or mentally cannot maintain himself or herself, then again the nomination law allows the EPF board to pay certain money to a person who will be maintaining or taking care of that particular person who is of unsound mind, or maybe that includes the OKU or orang kurang upaya. All right, thank you on that. And this is so far is about the EPF nomination. Now let's look at the life insurance and the personal accident policy side. All right, what happened when a policy holder he put a minor child, means a child below the age of 18, as a nominee of the insurance policy. Right. So if a nominee of the policy holder and he is also insured, meaning I buy a policy, I insure my own life, I'm the insured, I'm also the policy holder. All right. And I put a minor child and as long as I have a minor child, I put the minor child is caught under, just now, if you remember, under the first situation of what we call trust policy kind of situation. All right, so this way I say trust policy means the insurer shall pay to the appointed trustee. All right, so let's refresh our mind a little bit, because it's a bit, it's quite technical in that sense. If we hear this for the first time, and if you are not involved in the industry on life insurance or estate planning, and let me just highlight to you again. So what it says here is, if the nominee is incompetent to contract, okay, if you appoint a minor child, you put minor child as a nominee, or I put a minor child as a nominee, all right? Then if I die, then my the other parent of this child, the minor child, will be paid my insurance money. I die, insurance proceed, I put my daughter or daughters, then I did not put my wife or my spouse as one of the nominee, and I also did not appoint anybody as my trustee. If I have an appointed trustee, insurance company will pay to the appointed trustee, full stop. Okay, this is a situation. Most of the time, people don't appoint the trustee of policy. In this situation, then the parent, the other parent, me, my spouse, will be paid the money to hold on trust, for the minor children. Okay, on this point, just a quick one. If me and my wife, we are married, good terms, then not so much an issue, right? I know by experience and also a lot of time we see we have so-called single parent or people are just divorced. Okay, divorced parents or by divorced couple, then what happened is that if me and my wife divorced my ex-wife, all right, then what happened is that if I die, my insurance proceed where I put the minor child as a nominee, the insurance company will or can pay to my ex-wife. Okay, if my ex-wife love my children or is under their custody, then so much issue. But if you or friends knows that there are some of this kind of situation, you got issue, then you have to bring you to ask for advice or consultation. All right, thank you. And okay, this is just to repeat what I mentioned just now. I show you the actual wording in the insurance nomination law. So I will move on. Yeah. Okay. So we talk about implication 1, implication 2, and I got 2 more implications that I'd like to share with you. And this implication 3. Okay. Actually, I jumped the gun a little bit. All right. So in implication 3, let's look at a focus on life insurance. Life insurance bought by a single parent. Single parent can be meaning the spouse has already passed away. The person doesn't remarry, then means a single parent with a child or children, or in the event of a divorce. All right, so means no more spouse already, and I put child. Then what happened is, in the case of divorcee, if the divorcee dies, the policy, insurance policy on the life divorcee, and the divorcee's, what do you call that? Also the policy owner, then what happened to money? If it's actually nominate the child, the minor child, then what happened is that the nominated minor child, the ex-wife or ex-husband will be paid the death benefit, the trustee, the policy. Okay, so take note of that. Many people are not aware of that. I'm not saying that it's bad, but this is what the law says. And at the practical level, there may or may not have implication. So if there's any concern or worry, then I would advise you to seek proper advice from the competent professional in this area. Okay. Okay, so this one I will skip because I explained already, so I don't have to go through the wordings again. Okay, let's round up our discussion. I think we are on time. So implication number 4, okay, what I call the worst case kind of scenario. But when we do planning, especially estate planning, we need to plan more than one situation. Or in normal business planning that you do, you know, for in your job or your business owner, you usually look at plan A. If plan A doesn't happen, or if plan A, you know, or plan B, what happened, or even plan C, what happened, plan D, what happened. So when we do planning, we should be thinking in terms of in this way, this kind of attitude. So in the same way, in estate planning, when I do all this research and advise my clients, same way, okay? First situation, if this happened, all right, if one parent not around, then how do you plan? But we have to look at the worst case scenario there. Well, touch wood, in the event if both parents die at the same time or in a short span of time, then you leave behind minor children at home. Then what happened? I mean, you have money, you have asset, money in the bank account, in the unit trust account, you have assets under your name, your spouse name, all right? And then even sometimes you have debts and liabilities, you know, that one's another issue. So let's look at what happened if both husband and wife die together, and what happened to your EPF nomination, and what happened to your life insurance or PA nomination. Okay, let's look at the first one, EPF. Okay, the EPF your EPF nomination will fail if you put spouse 100%. A lot of people, either men or women, you put spouse 100%. Then you're thinking that if I die, then my wife can take care, can have the money and take care of my children. So most people think only plan A, only situation A. All right. But in this situation, if we talk about double tragedy here, mainly is husband and wife die together. All right, die together, and the death of the time cannot be ascertained, then the nomination will fail. Will fail means that your EPF money will fall back to estate. Fall back to estate means you have to look at. We are in a wills week, so the importance of having a will, a valid will, but must be a well-written will. So in this part, you have to look at what does your EPF money says, because if this year happen, then this EPF money will belong to the estate. Nobody will be able to claim it through nomination. So you look at what your will says, all right? And then let's look at now the second situation is what happened to your life insurance and your PA insurance nomination. Okay, so again, the nomination will fail if you put just one person, means spouse 100%. So me and my wife die at the same time, my policy, the nomination, no more. Then what happened? This insurance money, who can claim it? Well, we already look at the law just now. We say that it will revert back to estate. You form part of the estate, and then if no will, then my administrator with the LA, letter administration, if I have a will, then my executor will handle this money. So we'll have to go and file in the claim. And we file in the claim, then you need to file with the grant of probate. And grant of probate, then you must have the will inside there that mention what happened to my insurance proceed. Okay, so if it's not mentioned, if there is a residue clause, it will go to residue. If it's not mentioned and there's no residue, then complication arise. Okay, where my executor will have to go and file in for this insurance money under letter administration. So you got, so both set document goes in, so it's very troublesome. Okay, I mean, these are technical detail, I just highlight to it. Right, so to summarize, whole thing is, if nominee fail, no nominee, then of course the money will be frozen, form part of estate. Okay, and all right, I'll give you a few examples, again, a few kesah benang to round up my discussion today. This one is a news article that I, stumbled upon some years ago. So this one is say, orphan brothers seek a warm home. This is a very unfortunate case. I mean, some years ago happened in Johor Bahru, where both parents of these two young boys died, and then nobody take care. And so in this kind of situation, the parents did not be behind the will. And another point about having your will written is, especially when you have minor children, then you should or you must appoint a guardian of your minor children in your will. Okay. So so this one is quite a sad story because these two young boys at that time were taken care by actually the neighbor. It was an old auntie, and he went to the press because the auntie was already sick and could not help them already or take care of them. So they went to the press and appealed to the public. Here it says appeal to the public or any organization to take care of the two boys, give them an education and a decent place to live, and most importantly, of course, love and affection. Okay, so the emotional neighbor, was appealing, make this kind of appeal, in the press conference. And actually, they also actually interviewed the two boys. The boy was saying that, okay, it says that I hope there are kind people out there to take me and my brothers into their home, and not their only wish is that not for us to separate. That means they want both of them adopted by the same family. Okay. Okay, I quote you another case. The one happened in Malacca, and this one is I cut it out. I collected this particular news article. And it is in Mandarin, so in Chinese, so I will just translate for you. Okay, so this one is also a very unfortunate case. This couple, okay, means man and wife, so died in electrocution together. Okay, it's a very unfortunate accident. And then the couple left behind 3 minor children. And after the incident or the accident happened, so these 2 minor children temporarily stay at the auntie's house. And then, of course, one of the issue is who will take care of them. Okay, and so what happened? So who can decide? Okay, so the two poor minor children were waiting for the emergency family meeting to be called by the relative of both families, to decide who takes who home and all these things. Okay, so when we do estate planning, so you put this situation in mind, a worst case scenario, if you and your spouse not around, you left behind minor children, then what happened? All right, so this is called estate planning for minor children. So of course, will is the most essential document to do some planning. It's part of it. Okay, so the question that you need to ask yourself is who will take care of your young children, and then of course who will hold your insurance? I mean your EPF money. You may have substantially large amount in your EPF, and of course your insurance money. Am I correct? And then the next question, the third question, if you want, you can actually just snapshot or take a photo of this slide. How to make sure that your EPF, your substantial amount of EPF and insurance money will be spent on the health, maintenance, education, and welfare of your minor children until they become adult or even beyond age of 18. Okay. Right. So I just round it up. The solution is comprehensive, and we need an integrated approach to estate planning, which is we will not have time to discuss all of this in this 1 hour of discussion. So just to let you know that the instruments in estate planning that we need to use will be a will. Okay, and in the case of Muslim friends or clients, then you need wasiat. All right, and then of course you need to do your EPF nomination. But we advise you how do you integrate it, your nomination in your EPF, your life insurance, how do you integrate it with the will instruction? And inside a will instruction, you can actually put in what we call a testamentary trust. Or in the event there's a necessity, we can bring in another instrument called a living trust or inter vivos trust to tie up the few things together. Okay. So just to round it up, just to let you know that I use an integrated approach to estate planning, where we'll integrate the wasiat, the will wasiat, your EPF nomination, your insurance nomination, testamentary trust I mentioned, or even living trust. And if you are a business owner, then we got other things to worry about. How do you continue your business? And then we'll look at how to continue your business and your liabilities exposure. At not just personal level, but your business level, so you look at whether you are a sole proprietor, you are a partnership, and where there are unlimited liability. In the event of a Senyam Berhad, whether you sign personal guarantee to all these credit facilities under the company level. Okay, so the whole picture is what I call the integrated approach to estate planning. Right, and just a bit of information for you. So all this that I have explained to you, the solution side, actually I have come up with all the practical knowledge and lessons, all video ready lessons in my estate planning practice academy. So you can actually just print screen or just take a shot of this page and you scan it, and then I have a special promotion just for your MIEP viewers for this Wheels Week, to celebrate our Wheels Week. So you can just type in CAP student, because I do lecture for this certified financial planner course as well, and then I can give a proportional code as my students rate. Okay, so with that, thank you very much. I can take some of your questions, so I give back the whole floor back to Jason Tan. Thank you very much.
Hey, thank you, Mr. Lee. Thank you for your sharing today. It's really a lot of untold information about EPF. So now only we understand a lot of misconceptions that we don't know. Even we practice, we write wills, we also don't know all these things. So it's very useful and very insightful information. Gary,
So
you have any question?
Jason, maybe I take over from here. Thank you very much, Mr. Lee. So basically, today we have 3 Lees over here. You, yourself, myself, and earlier speaker for the Sokso is also Lee. So we have 3 Lees over here on today's hearing. So without going, I just want to ask, right? Tan Yen Fei actually did ask about stamp duty, LHDM stamp duty. I think that I just want to check with Mr. Lee. I mean, ask for some opinions, right? Just now you said the appointment of trustee companies, right? Is it same like assignment that generally insurance they're doing, assignment policy?
Okay, thank you, Gary, for a question. Actually, two situations. Okay, the one that we mentioned, I did not bring anything on so-called they call insurance trust, which is very common in the market, which some of the people are promoting, which is good, but need to look at the whole picture. The one we're talking about is a trustee under the Financial Services Act 2013. When it is a trust policy, then the policy owner have the privilege or the right to appoint the trustee of that policy money. All right. So in this situation, there is no what do you call that, stamp duty involved, and there is no because there's no absolute assignment to the trust company that goes into a living trust. The second structure, the second situation, then there is no implication on stamp duty because there is no absolute assignment involved, because we are not assigning out the policy to a trust company. That one, of course, it will attract stamp duty, and now they will assess a stamp duty based on the sum assured, not just nominal 10 ringgit. All right. Yeah.
Thank you very much, Mr. Lee. So basically, Mr. Tai, basically for the appointment of trustee under your insurance policies, right, it will not attract any stamp duties. But if you're thinking about assignment of your insurance policies, right, you want to maybe you want to seek some of the opinions or the views, right, do join Mr. Lee in his sharing on in his talk, which is we're going to post it later into the comment column. Can catch up with Mr. Lee to discuss further. So there's one question.
On that point, Gary, okay. Actually, okay. Now I explained the way is like step by step. Okay, so I got this the insurance nomination picture. Then it's also the insurance trust with assignment that attracts stamp duty nowadays. Actually, you can combine the two. Okay, so how to combine the two? Okay, just a brief one is we can structure in such a way that we make full use of the nomination, the trustee nomination under the Financial Services Act, and we arrange with a trust company to link up both. And in such a way, of course, there are certain limitations and certain things that you need to qualify to in order to be able to do this. And you can bypass so-called the bypass using the assignment and bypass the stamp duty. Yeah. Okay. Just for the knowledge of the audience.
Yeah, it's more like integrated approach with Mr. Lee is practicing. So we have a lot of options available. So to select which option that is what they call applicable to each of the family conditions. So do feel free to check out with Mr. Lee on the issue that you have in hand. So apart from that, there's some question coming from Facebook as well. Let me see. Okay. So is it true that nomination will not be eligible if EPF nomination is age 75 and may not have withdrawn his or her money? So is it true nomination will not be eligible if EPF nomination is age? So if the members is above age 75, right? Is the nomination will not eligible? I think this.
Yeah, answer I think is no. We can double check or double confirm with the EPF. These are so-called the surat layang that flies around. And just a few days ago, I also get some people who WhatsApp me in the group and forward to me. Yeah, I mean it shows that the people are concerned, so the awareness of will writing asset planning is increasing. But the answer is definitely no, because it's nothing in the EPF Act to say such things. Yeah. Thank you.
So the next question is, how does unclaimed money from EPF goes under the law? Is it same as 7 years? How to claim after the period end? So basically they are asking, how is the what they call the unclaimed, the EPF money will go into unclaimed. But I said no, EPF will keep on the money until the members reach the age of 100 years old. So in any events, right, the account is remain theirs, right? They will maintain their risk until the claim is coming in, as I'm aware. Maybe Mr. Lee have different. How's your opinion?
I think this one we have to double check with EPF. I mean, as what we can see, like what Gary says, that EPF will continue with the account until if there's a death claim, then they will process the claim. Although in the market we see some of these so-called news article to say that unclaimed money from EPF and all those things. I'm not quite sure how that situation happened. Of course, general rule of unclaimed money from like bank account, all these does apply. But if the money does get stuck in the unclaimed money, nowadays I think we can actually in the website you can also find something that can apply online, isn't it? Detail we have to find out more on that lah. Yeah, thank you for the question.
So basically we end, there is no more question over here, but do feel free to post your question if any into our comments column or contact Mr. Lee for further discussion to arrangement. So thank you very much for your time, MC, and then all of us, all of you all have attending this sharing. I think this sharing is very fruitful. So we know what is a nomination is all about. So we understand more, then we can plan more. But we remember planning a part is not only asset. Love and affection also very important things to consider about. So when you're planning, do plan about how your family will going to move forward when you are not around them. Thank you very much.
Okay.
Thank you very much, everyone.
Thank you.
Thank you.
Thank you.
Bye.
Bye.
Bye-bye.
Yeah.